Hey there, welcome back to the channel. In the previous video, we understood about what is the standard price, what is the moving average price, the differences, the characteristics, which is recommended for which type of a material, what happens if we use a different one than the recommendation, how the moving average price or the standard price changes based on the industry. Now, in this video, we are going to see in system how we can set a price control to standard price or a moving average price at a material type level or at a material master level, and what is the impact of the price of the material if there is any material transactions posted on that in case of both standard price as well as moving average price. So before we go into the video, do not forget to like it, share it, and subscribe if you haven't done it yet. And you all know it by now. You can join the channel and contribute for our work, and you will get some perks in return. And you can also do a one-time contribution by clicking the super thanks button. So let's jump into the video. We are back to SAP. So under SPRO, under Logistics General, Material Master, Basic Settings, and Material Type Configuration, under Define Attributes for Material Types, we can define what should be the default value of price control for every material type. For example, if I say finished goods, the standard one is FERT, and here we can see the default price control is standard price. So whenever you create any material of this material type, the system will have a standard price as populated as a default value in the material master, which can also be changed later on. Similarly, if I see for raw materials, ROH, the standard material type, here we have a moving average price or a periodic unit price. Again, periodic unit price is something a different concept altogether, but now we can treat it as a moving average price. So whenever I create any material of type ROH, this default price control populated in the material master is going to be V. Now I'll see a material. I have a material. So this is a raw material, and we'll see what is the price of this one. I'll go to the accounting one tab. Here if you see, I'm having a price control as V. Why? Because this is of raw material. The valuation class is 3000 and the price here is 10,000. So let us see what is the impact if I post a purchase transaction with a different value, not 10,000 but something else. But before that, we can have a material price analysis here which shows what is the total inventory value. How many units of inventory I am having at this point multiplied by the product. So I'm having price moving average as 10,000 and I'm having 100 units. So the total price is 100,000 or 1 million in the inventory. Now we'll post a purchase order here. So I'll copy this material. I'll go to ME21N. I'm not going to go slow here. I'm going to do all this quickly. We'll see what is the impact. All that I'm going to show you is what is the price that I'm going to take in the purchase order. So this is my purchasing organization, company code, and this is the material, and PO quantity, I'll keep it as 1 or let me keep it as 100. This is my plant. And the first thing, I'll go to conditions, and here I'm going to give this price different than 10,000. It is 10,000 from the material master, but now I'm making it as 20,000. So I'll see what is the impact here. The PO is created. We'll post the goods receipt. Let us display this document and we'll see the FI documents. So here if we see, we are having a raw material inventory updated by 2 million and the GRIR account hit by 2 million. Forget about these two. These two are coming from the purchase account configuration. I have activated purchase accounting in the AP side. So that's related to that. The GL account descriptions are wrong here, but we are focused only about these two GLs. So the inventory is now added with a value of 2 million when I have procured additional 100 units of this material. I need not do the invoice for this one because the inventory impact has already done with the goods receipt. So now let us go back to material, and here I am going to material price analysis. So here if you see, I am having first one 100 units purchased at 10,000 and the total value is 1 million, And next I have purchased 20,000 to 200 units. So total it is 3 million. The total sum is 3 million and the total units is 200 now because 100 units already existing, and then I'm having 100 units of purchase order again. So total now is 200 and the total value is 3 million. So if you go back to our presentation, the formula for moving average price is the total stock value divided by the total stock quantity. So what is the total stock value? 3 million, and total stock quantity is 200. So now the moving average price of the material is changed from 10,000 to 15,000. So if I go back, if I reopen the material, I'll also see that updated in the material master. So let me open MM03, the same material again, accounting 1 tab, and here if you see the per unit price or the periodic unit price is now 15,000. This is how the moving average price is dynamic in nature. It changes based on the transactions happening on that material, and any differences between the moving average price and the transaction value is directly absorbed onto the inventory, which means the inventory valuation is changing. Now we'll take one more material. I have another material which is having a standard price, and let us see what happens if I procure a material which is having a standard price. So this is the material. I'll go to the accounting 1 tab now. Here it is having a price control of S and the value is 1148180. So it is very a different number, but I am not going to procure at this value. Maybe I'm going to procure at this value. I'll take it as 5 million. So somewhere around 1.14 million, but I'll procure it at 5 million. So I'll go back, I'll create one more purchase order. Before that, we'll also see the material price analysis for this. So the total value is 1148. Earlier it is at 5 million. I have run product costing. Product costing was run at this value. So the remaining was gone into the price difference. Now it is 1148180. Let us see what happens if I run a purchase order cycle at a different price on the same material. I'm going to procure again 100 units of this. Here I'm going to give the price as 5 million. The purchase order is created. Now I'm going to post goods receipt for this. Document is posted and we will display this document now. I go to the FI documents and it is having a price of GRIR at 5 million, and the finished goods inventory is valuated at the standard price. So unlike the goods receipt FI document in the case of a moving average price, where both the inventory and the GRIR are valuated at the value in the purchase order, in case of a standard price, only the GRIR account is taking the value from the purchase order, whereas the inventory GL account, that means the inventory, is posted at the standard price. That means the inventory value is not changing. Whatever is the difference between these two, that is going on to a cost price difference, which is a price difference or a purchase price variance GL account. Again, ignore these two GLs. So these are the three that we need to consider. This is a primary difference between how inventory is impacted when it is having a standard price as a price control versus moving average price as a price control. Now we'll go back to the material and let me reopen the material. There is no change in the standard price. If I go back to material price analysis, I have procured 100 units. Even though I have given a different price in the purchase order, here it is showing as the transaction price as the standard price of the material. So there is no change in the price with any difference in the material transactions. Only if there is a standard price calculation and if it is different from the existing standard price of the material, only then the price is going to change in the material master. So this is how the standard price and the moving average price works. I hope you have liked this video, you have found it informative. If so, please do like the video, share it, and subscribe to the channel if you haven't done it yet. I know we have been repeating multiple times about subscription, but that is really important for us to cover our costs to help us motivated to create many wonderful videos like this. You can also join the channel, get some perks, contribute to our work, or click super thanks and contribute one time for our work. But please do not forget to subscribe. See you in the next one. Take care.